how do you help people when it comes to taxes, when it comes to this estate planning and protecting their wealth?
Definitely. Tax in the U.S. is paramount. It's so much to it. And there is a difference between accounting and strategy. And I always talk about this. Accounting is looking backwards. You're just recording. Strategy is looking forward and planning ahead where, hey, you're going to write history. And so for a lot of people, we pay taxes. There's not much we can do. We can make all of our deductions. We can do certain things that we can. But then there's other strategies. But in order to fall into this category, you have to be paying typically enough in taxes. So normally what that number is if you're a W-2 employee, you're paying $20,000 in taxes, which is a lot of money. That's a lot of money to be giving away. And so once you're in that category, typically what it means is you have other means of doing stuff. And so it may be as simple as, hey, let's form your company, let's reorganize it, save on certain taxes. Let's make sure we're doing whatever we can to pull money out that would be income for the company and place it into certain things that will allow us to not be taxed on them. And then there's other certain things as people grow in wealth. I'm a firm believer, don't put all your eggs in one basket. And with that, what I mean by don't put all your money in stocks and bonds. Go out, buy other types of assets, real estate, other things that have valuation and give you that true protection, diversification. And so what we'll look for in these cases are typically who we are working with are people who are willing to do real estate, people who are willing to do private equity type oil and gas depreciation syndications. You can do charitable syndications where you're putting money into it, you're getting depreciation out on the front so it can lower your overall AGI and save you some money on taxes. This is where strategy comes. There's no real boom, you no longer owe taxes. That doesn't happen. Not with the Internal Revenue Code, not with our IRS. You have to come up with ways that you can save money. A lot of people, and here's a misconception I have all the time, and I get phone calls all the time, especially in December. Hey, I need to do a charitable donation to save money on taxes. Well, the problem with a charitable donation is you're only going to acquire a little bit of a return off of this, a tax savings on this. So you're putting up $1. Let's say you're at the 35% tax bracket. You're only actually saving 35 cents. So now you've spent 65 cents to save 35 cents. But people don't understand this. And so I have to sit there and say, well, hang on, this isn't really how charity works. Charity is a giving strategy that just happens to save us a little bit in taxes, but it's not the way we want to go. What we want to do are find things that will actually lower our taxes, but we want them to also be types of purchases that can give a return on investment or can give you an asset that will appreciate in value over time. And so that's what tax strategy is really looking for is let's look at where you're at. Let's look at what our options are. And this is how much we can save you over 2 years. And then you start doing this every single year. So I think my CPA has over 80 different tax strategies that we can implement. So there's all kind of different ones, but a lot of it just comes down to is let's lower AGI through certain methods, specifically depreciation or other types of mannerisms.
Oh, yeah. And, selfishly, when it comes to purchasing an asset that appreciates over time, tax deferred, I'm going to selfishly say, make sure you buy some life insurance. That's something that you can pass to the next generation tax free, right?
It is.
So selfishly, I'm going to say that, right? So, and what we're talking about is avoiding voluntary taxes. We're not talking about people illegally evading taxes. We're talking about legally avoiding taxes. And there are some red-blooded Americans that seem to love paying taxes. And when I say seem to, right? Because I think some people cope they have coping mechanisms, and they force themselves to just be okay with getting slaughtered by their uncle, right? This guy that opened your door in the middle of the night, right? With the hall light shining in the, like they just find a way to cope with this weird, creepy uncle, right? But when I tell people that, I say, hey, even if you believe in the thought and the idea behind taxes, would you not agree that maybe the government isn't spending your money wisely? And a lot of people, they'll say, yeah, they're not necessarily spending their money wisely. And I say, well, if I could introduce you to somebody like Matt Meredith, and he can show you how to avoid these voluntary taxes, and not just to be greedy, but you can give this money that you save to the friends, family, and charities that you know, like, and love, and you can actually see that it's doing what it needs to be doing for you to do your part and give it back. Wouldn't you prefer to rather do that than just give it to an entity that you just said is maybe managing it wrongly? Wouldn't you prefer that? And usually they say yes.
Randolph, I didn't choose tax law so that I could be a good accountant. I didn't. I was tired of paying taxes. I want to know how the law was set up and how to maneuver around it. And what we find with the wealthy is that they utilize these strategies. And so it becomes, why am I not utilizing these same strategies? I can diversify my overall holdings altogether with certain things that are much more tax deductible than other things, take depreciation, have still a return on money, and then transfer things without ever paying taxes.